Hello and welcome back to Coin Lady channel. A tweet from James K. File surfaces in today's clip, revealing that Judge Torres has taken a stand on Edmund's speech by refusing to allow the SEC to seal these papers from public view. The SEC did everything in its power to prevent these documents from being made public, saying that they contain proprietary information about the corporation that should be kept under wraps. There must be something in that speech that has the SEC worried, and I think I know what that is. Now that it's out in the open, we can form our own opinions about it. The American legal system is taking too long, but I have hope that we will eventually learn the truth. Let's get today's video going by playing the opening credits. Welcome back to Moneyside, crypto fans go to channel. If you're just tuning in, hit that subscribe button and make sure you're set to receive push notifications. If you enjoy reading this, please hit the like button, and if you have any questions or comments, please use the space provided below. To begin, here's a tweet worth reading. Susan reports that although the US is fixated on enforcement rather than clarification, the EU is making significant headway with a sensible progressive approach to crypto regulation. We anticipate establishing a strong foothold in the European market and expanding there. The climate in the United States against crypto businesses is growing increasingly unfriendly. Recently, even Brad Garlinghouse has been quoted in interviews as saying that if someone wanted to start a crypto company and approached him, he would urge them to do so outside of the US. The dollar's recent decline suggests that the cryptocurrency market could provide the currency's next lifeline. Fortunately, the United States government has many arms, so Gary Gensler will have to answer for his misbehavior in the cryptocurrency realm before the Securities and Exchange Commission, SEC. Even though the SEC has been fighting tooth and nail to keep its secrets hidden from the public, the tide is beginning to tilt in their favor in the ongoing case between them and Ripple. The SEC's inability to keep up with developments in the cryptocurrency industry has led to widespread accusations that it has stifled innovation. Gensler, for whatever reason, is in command of a universe he has no idea how to manage. Most people assume that he doesn't like cryptocurrency because he hasn't made any financial investments in it. However, not all is bleak. And now this from Fred Rispoli, today's other update. He tweets his fiery opinion on the topic. He claims that the summary judgment decision is likely finished and ready to be issued. The finishing touches, if any, should be added any day now. However, it might happen at any time. There is nothing particularly shocking about this conclusion, with the exception of the Henneman email decisions, as Rispoli points out. An absolute victory in the Ripple effect, in his view, would have offered Judge Torres an out from issuing the production order. Just because the SEC had a good first day doesn't imply we did, too. However, he continues to believe that both of these possibilities are extremely remote. He then suggests that the SEC might be forced to reach a settlement because of this. Yes, but in his opinion, the cats are already out of the bag on these docs, and eventually some enforcement case would have had them publicly published if not here and Ripple, but the tone of this judgment is pro-Ripple. It is hoped that this trend continues through the summary judgment decision. Looking deeper into the crypto world, we discover that the CEO of Ripple's welcomed Medico and CEO Andreessen Takani on Twitter. To double down on Brad's tweet, he should know that as Ripple grows into custody, a crucial aspect of the crypto infrastructure, they will be able to provide their customers with the technology necessary to safely store, distribute, and sell any tokenized asset. Big news, for sure. In addition, he said that they are pleased to officially announce that they have purchased Ripple as of today. With this acquisition, Medico will own 100% of Swift-based digital asset custody and tokenization technology provider. In spite of the fact that we have just emerged from one of the coldest crypto winters on record, he's extremely bullish about the future of Ripple because of the common ground between his company, Medico, and Ripple's focus on enterprise utility regulatory compliance and a global-first mindset. He continues by saying that every day, the Ripple team considers the long-term opportunity of crypto utility, dedicates financial minds to that cause, and works with others that share that vision through partnerships. And as we wrap up this video, CNBC International will provide us with yet another update. CEO of Ripple Brad Garlinghouse claims the US has made crypto regulations as complicated as possible, with the US SEC in the forefront. The downside, as pointed out by Garland House, is that it has prompted businesses like Ripple to expand their investments beyond the United States. 95% of Ripple's consumers are located outside of the US, he added. The majority of this year's hiring for Ripple will occur outside of the United States as well. That Ripple is financially stable was another point of comfort. According to Garland House, Ripple has a very solid balance sheet, so we are leaning in and playing offense. In fact, as we indicated earlier in this video, Ripple funded the Medico purchase with $250 million of cash off its own balance sheet. This is but one instance of that. Given the skepticism among investors caused by recent high-profile failures in the cryptocurrency industry, are you attempting to tame the sector's inherent volatility and risk by increasing your involvement in its underlying infrastructure? Fundamentally, I believe this is a discussion of the potential implications of digital assets and blockchain technologies for the future management and transaction practices of financial institutions. Fundamentally, we believe there will be many instances when assets that we currently consider trade will be tokenized as a result of tokenization. Financial institutions must plan for the long-term storage of not only the cryptocurrencies of today but also the tokens of tomorrow. Larry Fink, CEO of BlackRock, has described this as a multi-trillion-dollar asset business, and we expect it to go much more. It works perfectly for us. It's where we've always focused at Ripple, because that's where real problems from real customers can be solved. You and the SEC had an unpleasant encounter in 2020. Given that US regulations are becoming increasingly strict with cryptocurrency startups, I'm curious if the fact that Medico is headquartered in Switzerland and employs people from outside the US was a selling point. Well, I believe it's fair to say that the United States has done everything possible to make it unclear what laws apply to the crypto industry. And that's why business ventures and investments are leaving the United States for places like Europe, which has benefited greatly from the muddled situation there. You're right that the US Securities and Exchange Commission has been at the forefront of spreading this muddled message. Be aware that we are not a certified financial planner. The content of this channel is presented solely for amusement. Leave a comment with your thoughts and opinions so we may begin a discussion. We appreciate you tuning in, we wouldn't be here otherwise. If you enjoyed this video, please hit the like button and subscribe button down there. If you enable alerts, you can find out whenever we publish something new. See you in the next one, bye.